This first entry is joining strength. I'm not chasing randomness. I'm trading confirmed movement. Trade approaches expiry. Okay, trade 2 closes in profit. That's another $288. Hey friends, Aaron here. Crypto often pushes people into 2 extremes. Either they start trading way too often because the market is moving, or they freeze because what if it reverses right now? But the truth is simple. In crypto, the one who survives isn't the bravest. It's the one who can read structure and make decisions without emotion. Consistency here isn't about always guessing direction. It's about recognizing when momentum is alive and when it's starting to fade. If you want more breakdowns and useful info on discipline, mindset, and entry logic, check my Telegram. The link is in the description. Let's go. All right, we're on pocket option, candlestick chart, because on crypto, it's especially important to not just see direction, but strength. Candle bodies, wicks, slowing momentum, and the character of pullbacks. I'm choosing Bitcoin OTC with a 92% payout. The time frame is going to be 1 minute. It's a good balance. The market is still dynamic, but you can make decisions calmly without reacting to every tiny flicker. I keep one simple idea in mind. I don't fight the move, but I also don't fall in love with it. Momentum can continue or it can fade. I trade the facts. I start the session with $100 and enter call. Price is moving confidently. Buyers are in control. Candles form in sequence. Pullbacks are weak. The move looks stable and clean. This first entry is joining strength. I'm not chasing randomness. I'm trading confirmed movement. We wait for expiry. Okay, trade 1 closes in profit. We're up $192. Now I need to see, was that a one-time push or is the structure still clearly bullish? Okay, I increased to 150 and enter call again. The upward move remains intact. Corrections are small, structure is still bullish. Sellers don't show enough power to break the move. Price keeps pushing up on momentum. I'm not increasing because it worked. I'm increasing because the market hasn't shown weakness. That's discipline, not emotion. Trade approaches expiry. Okay, trade 2 closes in profit. That's another $288. All right, great. But now comes the most important part. Not to keep buying just because it was up twice. Strong growth often reaches a phase where price hits a local high and starts slowing down. That doesn't mean a permanent reversal, but it often means a correction, a natural pullback after an impulse. And if I see slowing momentum, wicks, loss of pace, I don't pretend it's not there. I adapt. Okay, next I increase to $200 and decide to enter put. Price reaches a local high, the rise slows, and correction signs appear. The move up is no longer as confident. It becomes harder for buyers to push higher, and sellers start applying pressure. Here I'm not calling the exact top, I'm responding to what the market is showing. Momentum exhaustion and pullback signals. That's trading the facts. Now we just wait for expiry. Okay, trade 3 closes in profit. That's up $384. So here's our total balance. We're up at $864. Okay, 3 trades, and the key wasn't picking the right direction. The key was reading structure and switching at the right time when the market changed its behavior. This example shows a simple truth. Stable results don't come from direction. They come from precise analysis, discipline, and the ability to adapt. Crypto rewards people who stay calm, people who wait for confirmation, and people who don't turn trading into a race. If you want more breakdowns, useful info, and a systematic approach, check my Telegram. The link is in the description. I regularly share how to trade with a cool head and build consistency over time. Subscribe if it helped, and remember, the market can be sharp, but your job is to stay precise.